Hello students, in this video I will discuss the provisions applicable for buyback of securities under the income tax law. Capital gains on buyback of shares or specified securities is covered in section 46A of Income Tax Act, which is a part of capital gains head, guys. So please be careful. I have made one table here and there is also an amendment in this section, guys, from 1st October of our previous year. Okay, first let me start from the last. If there is a buyback of specified securities by any company, whether domestic or other than domestic company, which we call it as ESOP, that is employee stock option plan, guys, it is not subject to tax in the hands of company. It is always taxable in the hands of shareholders. So we have to compute the capital gains in the hands of shareholder and they are the one who is liable to pay tax. Sir, nothing special because they are the one who own it. Now they transferred it and they are liable to pay tax. Yes, exactly. But in case of buyback of shares, any other shares other than ESOP shares, if it is done by domestic company, check the date of buyback. If the date of buyback is before 1st October, that is from 1st April to 30th September of our previous year, then it is subject to tax in the hands of company, that is the domestic company. In addition to whatever tax they pay on their income, they should also pay tax on the capital gains income of the shareholder, which the shareholder has earned on this buyback. At what rate, sir? 23.296% effectively, including surcharge and cess, guys. Please be careful. I am using the word additional income tax because this is the tax which the domestic company has to pay on the capital gains income of the shareholder, not on any capital gains income of the shareholder. Only the capital gains income of the shareholder which he has earned due to this buyback. And when the company has paid the tax, the shareholder will enjoy the exemption under section 1034A, guys. Yes, guys. Now coming to, sir, what if the buyback of share is done by a domestic company on or after 1st October 2024? That is any day after that. Then it is not subject to tax in the hands of company. Now the shareholder is liable to pay tax, but not under the head capital gains, but under the head other sources, guys. So under the head income from other sources, whatever is the sale value, which we call it as buyback price, will become a deemed dividend in the hands of shareholder, guys, which will be taxable at the normal rate as applicable to him. It is not a special income also. You can see treated as dividend and taxable under the head income from other sources. Buyback price is taxable as income from other sources without allowing any cost or expenses. Not even cost of acquisition he can claim. But due to this, when buyback happens, the shareholder will have capital loss, which he can set it off against capital gains, guys. So I repeat this, whenever there is a buyback of equity shares by the domestic company from the shareholder is liable to pay tax on the sale value, considering it as deemed dividend under the head income from other sources. And the tax rate applicable on this would be the normal rate as applicable to the associate, guys. But in that case, whatever cost of acquisition he will have, that would be considered as capital loss, which he can adjust it against capital gains as per the set of provisions. Sir, what if buyback is done by any other company other than domestic company? Then irrespective of the date, same provision, it is not taxable in the hands of company, guys. The shareholder has to pay tax as per the normal calculation. And this will be capital gains income only, not the other sources. Capital gains income. How do we calculate capital gains income, sir? Sale value, that is full value of sale consideration would be buyback price. Then if there is any expenses on transfer, consider it. Then cost of acquisition is nothing but the purchase price of the share, guys. Normal calculation, nothing special in that. But please be careful. This is an amendment part. I feel this is an important from your exam point of view, guys. This is all about the provisions with respect to buyback of shares. Thank you.